The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 14th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Steve V. Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tigers Den. Well, Andy Ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Marvelous Monday, too. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 89 points, printing out at 24,920. S&P up 4 points, 2731 is the print. NASDAQ 100 up 0.3%. That's 22 points, or 69.75. Russell 2000 off 4 points, 1602. Semis up 1 4/10%, at 19 points. Trannies are down 38 points. Gold is back $1, silver off 8 pennies. Light sweet crude up 21 cents, trade out at 70.91. Leading the charge here to the upside, you've got ticker symbol BGNE. That's up $17 or 10%. Churchill Downs, a little racing going on, up nearly 6% or $15. NXP Semiconductor 14%, $14 really to the upside. Madison Square Gardens up $9 and change, nearly 4%. Booking Holdings, BKNG, up $13. That's 0.6%. Mercado Libre down 3% or $9. Red Hat up $7 or 4% out there. So we've got things to look at. Let's go look at what has been requested. The first request comes out here from the Tigers Den, and the question is, can we take a look at the iShares S&P 500 small cap ETF. Ticker symbol there, folks, is IJR. So here, as we take a look at it, we've got 3 different time frames that we can look at. We've got daily on the left. Dead center is the weekly, and to the right is going to be our monthly time frame charts. Now, what we're looking at here really is essentially either some volume metrics or where is price trading in relationship to its TAS market profiles. We can see currently, we're in the month of May, and price is trading above the top of its bearish structured box. You might say, what do you mean, bearish structured box out there? It's a great question. Let me show you what it is that I mean. The month is not over. We're going to turn price up. As we turn price up, we can see that the center line, there's 3 lines representing the box, although it doesn't look like a box, but there's a top, a center, and the bottom. When the center line of that box is closer to the top, then we refer to it as a bearish structured box. What does it mean? Well, the bottom and the top of these boxes here tell you where buyers and sellers, in essence, are lined up. The center line of the box tells you where there's the largest congestion. We'll call it fair price, where both buyers and sellers believe that that's the fair price within inside this trading range. Oh, that's a mouthful. Nonetheless, we said it. So if at the end of the month, we're not at the end of the month, but if at the end of the month, IJR were to close above a bearish structured box at 79.29, that would say you've got a breakout inside the IJR, and you would anticipate more price, more higher highs to come. However, if we take a look at where we're at inside the weekly and the daily, let's go see what kind of confirmation we have here. In the weekly, you're well above the top of its box, 78.47. And in the daily, you're above the top of its box, 80.24. We can see prices pulling back. We can see you've got at this stage here, you've got not only a bearish engulfing candle, but you have a key reversal session. What I mean by that is we're going to say this is in an extended condition. Why would I say that? Well, because we're at all-time highs, or we were at all-time highs earlier today. That would be one reason. Two, because price has exceeded both the high and low of Friday. And three, we're closing in the opposite direction of the trend. I don't know where the candle session ends the day. But if it does end here, you've got a key reversal up at its top. Now, the last time that we saw highs out here on a daily basis in the IJR, the trading session was on January 24th. January 24th was also a bearish engulfing key reversal session out there. Something to think about. Then what we saw price move down, make a low out here in February 9th to be exact, comes back up, tests that swing point high, does it on the trading day of March 13th. Volume behind that move was, let's say actually get our data set out here so we can look at it. The volume there was 3.5 million shares, testing 4.2. So it was a test. It was a rejection. Price goes ahead and moves lower. Next time up here, we're taking a look at April 18th. April 18th, 3.7 going against 3.5, going against 4.2. Still not enough to bust it out. However, a couple trading sessions ago, that being Thursday, we saw price take out those highs. So resistance, which has now become support. Let's go see where that is. And we're going to use the highest high out here, which in this case, let's see what color you like. Let's use a yellow colored line out here. So we're going to actually use, well, as soon as I can get the tool, we're going to use the high from January 23rd. Whoops. It'd be nice if I actually grabbed that high out here. Maybe I did, maybe I didn't, but we can do a better job, right? We know we can do a better job. 80.68. So here's the deal. Is old resistance new support? I dunno. D-U-N-N-O. But if we see price get back below 80.68, and more specifically 80.24, you will have a failure. What does that set up? That sets up a pullback in on a daily basis into the 77, 87, 78, 21 level. That is what Steve-O sees inside of the ETF for the S&P 500 Small Cap Fund, IJR. We had another question out here. Hey, Steve-O, can you take a look at the Russell 2000 equity futures contract and see what they say? Because Ruby went short the small cap futures this morning. We'll do that. We'll do that when we get back from this break. But before we go to that break out here, Ruby, kind of similar situation to the IJR. If we take a look at the highs, the tops that were formed out here, inside the Russell 2000 cash indice back in January. This is, try to get my cursor. Come on, get your cursor. Back on the trading session, January 24th, nice bearish engulfing. Next time up, nice bearish engulfing, March 13th. Next time up, well, that would be today. And right now today, the same old bearish engulfing candle, testing those swing points out there. So that's what you have going for you. But when we come back, we'll go look at the equity futures contracts for a couple different time frames, see if we can assist you further, because the question is, where's support? Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Ruby Tuesday inside the Tiger's Den, who went short the Russell 2000. By the way, the charts that we're going to be looking at have a 10-minute delay on them. So the price that I give you at 118 may not really as of 108 out here, but hopefully it's good enough for the work that you and I are going to do. Now, Ruby is using the 4-hour time frame for making her decision making. So if we come take a look at the 4-hour time frame, here is what we're going to see. We're going to see that as price was making a high out here, and on a 4-hour basis, the high I'm referring to is the one that took place at 10 o'clock this morning. Since that high, and by the way, at that stage in time on a 240-minute time frame chart, price was moving higher, doing less relative energy out there. The real confirmation has come during the last 4 hours. So that's between 10 and 2. Of course, we've got quite a ways to go before we get to 2 o'clock. But at this stage of the game, it is a confirmed short-term top inside of the Russell 2000 equity futures contract. Now, take a look at the 240-minute chart. Ruby, what you're going to see is you're going to see a red dash line out there. That is one of your Tom DeMark setup trend lines, and that says that price would be targeting the 4 o'clock time frame on the trading day, it looks like, of May the 9th. And that's right in the 1590 area. Not exactly 1590. I can't get my system to cooperate with me, and so there we go. That is 1588.50. I write that down on a pad of paper. That is a level of support. We're going to give you more levels of support out here because now we're going to change over to Stevie's E-signal charts. And on Stevie's E-signal charts on the 4-hour time frame, what we're going to see is that price has pulled back right into a level of support. This is a key level for you to be paying attention to because it is our TAS market profile. The bottom of that box is 1601. Basically, we're trading at 1601. Again, a 10-minute delay. Maybe we're trading below. Maybe we're trading above. But 1601 is the number that you want to take a look at. What happens if we close through 1601? Well, Ruby, I'd say it like this. If we take a look at a 240-minute time frame, the last time we closed below the bottom of a 240-minute profile was all the way back here on May Day, May the 1st. This is May 14th. So closing below that at 2 p.m., right? It's a 4-hour time frame chart. So at 2 p.m. would say, hey, you've got a change in trend. And we would go ahead and give you standing applause, but if I stand up, you won't see this ugly mug. So I won't stand up, but we still would applaud the move out there. So now, what do? Right? Isn't that the question? What do you do? Well, one of the things we do is we take a look at our other time frame charts out here, such as the daily and the weekly, to try to figure out some price levels. Well, on a daily chart, you're looking at 1589. That was the top of the box. That was passed through 4 trading sessions ago. So old resistance ought to become new support. No idea whether it will or it won't, but you need to jot that number down. That's 1589. Another area that I'd be looking at is, I'd say, and you've already asked that question, I'm sure, where is Stevie's red line? Well, as we speak, 1:21 in the afternoon, 1586 is the number. You're also going to see displayed on my screen on a daily basis a green dashed line. That, too, is a Tom DeMark setup trend line level. And that's the high of April 24th. And that high is priced at 1577. So those are the numbers to be focused on and paying attention to as we speak right now. I hope that helps you with your trade. That was sponsored by, I don't know, the folks at, who was that sponsor? Snickers. That was sponsored by Snickers. Who owns Snickers anyways out here? M&M, Mars, somebody like that? I don't know who owns Snickers. All right, so we've got the Dow at 59. S&P is 88 cents. I know we've got some questions from people who let their fingers do the walking. So let's go right to those. We've got one from Lee B. Lee B writes in, and thanks for putting in a radio show question. You see how easy it is for me to go right to my cell phone, go right to the email, and go right to the emails that say radio show question. That is a beautiful thing. So Lee writes in, hi, Steve. I say hi, Lee. Hope you are well today. I am. Hope you're well also. Was wondering what your current thoughts are on IWM. This is a ring the bell. This is an IWM day. So I guess I've given you the thoughts there, but let me finish your question. We hit a new all-time high this morning, but since pulled back. Now, I don't know that we actually hit a new all-time high, but let me just take a quick peek. You said the IWM. Maybe that's the case. I was looking at the Russell earlier. And, yeah, so you're okay. The Russell, the all-time high used to be 160.63, and today you got up to 160.69. So right amundo, although the actual, did the Russell do that too? Not that it really matters. No, the Russell itself, the cash indice, did not do that. No big deal. But you asked me, what are my thoughts? No different, really, at this stage. We've identified that what the Russell has done, or the IWM has done, has generated, you know, you're back up to the highs. We had been at these highs since January 24th out here. Each time the trademark signal, for the most part, has been a bearish reversal candle. No reason to think that that is not the case today. Now, in the case of the IWM specifically, we might have some different data to give to you. So let's go switch over to that. Take a look at IWM, because you want to know what Stevie's red line is. So we're going to let that puppy populate on my chart. And the number there is 157.64, give or take out there. That is, in essence, the first level of support on any kind of a pullback out here. Your question is the run over for now, longer term? You asked longer term. Well, in order to really answer that question, Libby, because you say longer term, and I don't know what that means, longer term. So I've got to do a little bit of guesswork here, or I'm going to answer it the way that I want to answer it. And that is, if we take a look at this chart right here. This chart happens to show you the Russell 2000 in multiple currencies. It shows you the U.S. dollar, what we're trading in right now. Left-hand panel takes a look at what the Russell's trading in euros, takes a look at what it's trading in Japanese yen, as well as Great British pound. There's one thing that I know, Lee B, and that is when this indice, when any indice makes a top, and the Russell 2000 did not, it will top out at all-time highs in all currencies on the same day. And we don't have that. We've got the Russell 2000 traded above all-time highs in Great British pounds. It moved to a new all-time high as we took a look at on Friday inside of the euros out here. So long-term, like long, like for months or something like that, nah, I don't buy into it. I don't buy into it right now because the charts are not buying into it. Can we have a good old-fashioned retracement, a short-term high that lasts for days or weeks? Absolutely. Ruby Tuesday might be onto something out there because there's many other patterns inside the intraday charts out there that also confirm a short-term top. So now all that we can do is go take a look at resistance. But, Lee, I would ask you the question, why? What are you doing? I don't know what you're doing here. Are you short like Ruby is? You know, and the Russell is the strong indice. Strong indice. I don't know. Maybe that's not the one to actually short. Something to think about. It's Steve Rhodes from TFNN. That was from Lee B. in San Francisco. What a beautiful town that is. City. Steve Rhodes will be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 63, S&P is up 2. So in summary, Lee, the answer is, your question was basically, is it done, headed higher for the long term or some period of time out there? Look, here's what I would say. I'm not saying you have to go short it, especially since it's been the strong indice out here. But I am saying I wouldn't be buying the IWM as we speak right now. Now, let's go out to something that somebody's interested in buying. That's Qualcomm out here. And John in Sarasota writes in. He says, Qualcomm, QCO. He says, hi, Steve. I say, hi, John. Hope you're doing well. He says, has it hit the bottom and headed up? So as we go take a look at Qualcomm out here, we want to do a couple of things. First thing, we're going to take a look at Stevie's chart. As John has been able to identify, it made one of the most beautiful bottoms out here, the exact type of bottom as in top that we like to take a look at when price is moving lower, doing less relative energy. You're just looking for the trampoline effect out here. And in the case of Qualcomm, it gave you that bottoming signal. It went ahead and it confirmed that pattern on April 26th. Nice little bullish engulfing candle there. Then on the very next trading session, the pattern completed. The bottom completed out there because price got above Stevie's red line. That was a signal to come on into Qualcomm. Is it today? I don't know, but you do have another bullish candle today. Here you might look at it and say, but the body of that candle is red. Yeah, so what? It's just got red hair. That's all. There's nothing wrong with a little red hair. In this case, it was a gap to the upside, a rising window. That is a bullish candle signal. I don't know how the day is going to end inside of Qualcomm, but it's given us nothing but bullish candles since that bottom was made. We even made a nice little three-river morning star pattern out there, another bullish candle. Using Stevie's momentum indicator, the Rhodes momentum indicator signals, you're going to see nothing but red boxes as we speak at this stage. Where is it that Qualcomm is likely headed to? We'd have to use that green dashed line out here, and that is your Tom DeMark short-term trend line out here. That's in the 60 to 80 type area. I can see there's an open gap out there as well. That's what this chart is showing. Now, this is still, quite frankly, maybe it's a bottom. We've got to call it what it is, which is really at least a counter-trend rally out here. The reason we have to call it a counter-trend rally is because the price oscillator, the difference between two exponential moving averages, is still below the zero level. It's reading right now as minus 1.25. That doesn't mean that price can't move higher. And it does look like over time, price wants to get into that 63 area. Now, let's go switch up. Let's go take a look at the TAS market profiles for Qualcomm, looking at all three time frames. And as we take a look at it, on the daily, you're above the top of the box. On the weekly, you're not. So if we're going to go find a level of resistance, that's going to be at 58.89 out here. And if we take a look at the monthly chart, that level of PS daily resistance is at $59.10. Probably not the best reward risk time to be getting into this puppy as we speak right now. Yeah, sure, the 63-ish dollar area is its target. But in order for that to happen, what you need to see is price close about 58.89. So if you're looking to get into Qualcomm, maybe, because there are several short-term topping signals in the market. Are they going to be confirmed at day's end? I don't know. Is it going to be confirmed at 11 o'clock tonight? Maybe. I don't know when. I don't know if. I just know that right now, as we just took a look at the IWM, and as I take a look around, and we looked at the IJR, as I took a look around at some other things out here, some other patterns, when I say things, now it's probably not the time to go ahead and dip your toe into the water. Because Qualcomm is likely to go ahead and pull back if the market's going to pull back. And then you want to see how it's going to pull back, and hopefully it's with lighter volume out there. So has it formed a bottom? Absolutely. We took a look at the day when it did that out here, and that looks pretty nice. So now I think what you should do is just kind of, if you can get the market correct, and right now the market is saying not so fast to both sides of the trade out here, but not so fast. Why don't you sit on your hands just a tad bit more? But learn Stevie's bottoming pattern out there, because the time to have bought Qualcomm was many days ago. In fact, it was back on April 27th, and we're now at May 14th. But thanks for listening. Thanks for writing in, and good to hear from you as always. Let's see if we've got any other questions out here, and that way we'll know which direction to take. I see no other questions, but these email lines are open, so you can send me an email, Steve at T. Oh, I take that back. We just got the quick update, and Hot Dog went ahead and sent in a request, and Hot Dog wants to get into ACBFF and MEDFF. A lot of signals out there, so let's go take a look at ACBFF, best friends forever. And as we take a look at this is the Aurora Borealis, otherwise known as Aurora Cannabis out there. And many people probably have seen the Aurora Borealis with a little buzz on. But if we take a look at this, and the question is, you want to get into it right now, is now the time? Well, let's go take a look at Stevie's other chart, see if we can see if that was a decent bottom quite a few weeks ago out here. Again, AC, BFF. Probably my chart's going to take a little while to, oh, not at all. So what kind of, I know you don't see it on my screen out here, but if it's not worth showing, it's not worth showing. And guess what? It's not worth showing. So here's all we know out here, HD TV. If you're going to buy this, pull them back a bit, and this thing is really just kind of consolidating sideways. The volume at the bottom out here was 3.7 million shares, and we backed up into it with 1.2. So just simply from a volume perspective, it does look like the selling has dried up. Although today, for some reason, you've got volume. I don't know what that reason is. You didn't want to see that necessarily, but you've got 2.2 million shares. You're trading into a swing point from April with 3.7 million shares. It's a bit too hot for me out here. But if you're going to buy it, why don't you take a look at a price level of $5.98? What you don't like about this is over the period of the last 4 weeks out here, that's right, an entire month, what price has not been able to do inside of this equity, Aurora Cannabis, has been able to close above resistance on its weekly time frame. That's $6.52. It's just something you don't want to see, because otherwise I can't really find, other than a test of a swing point on light volume, I really can't find the reason to get in at this price. In fact, if anything, what the weekly time frame chart is telling you, and it's telling me, is this equity could easily pull all the way back to where it broke out. And where this thing broke out was in November of 2017. And at 613, if price moved down there, we'd have egg on our face. That'd be fried egg, because that price is right around the 252 level out here. So be patient. Be patient. Just be patient. Maybe on this equity, you buy it on a breakout, or you buy it if it breaks through support as it comes back to that breakout area. Nonetheless, today is suggesting, as long as price closes below 533, did I say 533? I probably did. What I meant was 634. Let's get this straight. If it closes below 634 with volume, possible. It's very possible. I'm not talking to James Comey BS possible before sleep. I'm talking about the kind where it says, maybe I go test the bottom of that swing point. So I would just be patient. Now, you want to take a look at one other one. I'm going to guess because of all those initials out there. And really, why do they use all those initials for people that are smoking cannabis? They're not going to be able to remember that. But it's MEDFF. I'm going to guess this is the medical version of it. Hey, this is Med Relief out here. Now, this whole stock chart looks a whole lot different. So when we come back, let's go do an analysis of this. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 87, S&P is up 4. You know, in HD, thank goodness, because, you know, here's a stock, MEDFF, that is Med Relief Corp out here, if I'm properly pronouncing it. You know, when you're flying high, like something like this, you want to make sure you've got a good wingman at your back, and you and I, we do. That's OB1. Right, because he was able to write in to let both you and I know that Med Relief out here is being bought out by Aurora Borealis out there. So you asked the question, you know, at what point would you get into either of these? Well, you can take this one off the table. But what we can do here, and that's what's really important about this stock chart. This is, in essence, what you were looking for. If you take a look at this ticker symbol, MEDFF, and you go back to February 5th, when it made a bottom with 539,000 shares, what you like to see is price coming back and testing that area out. In fact, you can see how that was a real breakout area, because if you go even further left on the chart back in November 2016, this thing had gapped up with 227,000 shares. Not a great amount of shares, obviously, but certainly identifying for you levels of support, because gaps are our friends out here. They tell us where sellers have said, hey, that's something I'm interested in. And really, when you take a look at the trading session back here on April the 4th, it was 249,000 shares that were testing 539. And then you had 173,000 testing the low from February 5th. So in essence, that was your buy point. That was the buy point. You can see how this just simply continued to move higher, never really pulled back on any kind of volume. But today is not the day. So you've got to be taking a look at the other ticker symbol out here, Aurora. Nothing has changed there, even with this information out here, you know, as far as what is it that you should do. I think because of the volume that we see, now some of that because this is a all-stock deal out here, still says you've got to, does that change things? I'd see what happens over the next couple of days. Right now, this thing is range-bound. If you want to dip your toe in this, again, the 598 level, the bottom of the box, somewhere right around there, you really want to see this equity get above 652, stay above 652, get inside that weekly trading range out there. Brought to us by our friends over at TAS Market Profile. So, HD, thanks for writing in. Thanks for listening. And thanks to Tom O'Brien for being able to make sure that we stayed on the right track there. All right. I see no other email requests out here and nothing else inside the Tiger's Den. So if you do want me to take a look at something, please go ahead and post it, ping me, send me an email, or even better yet, pick up that phone, dial in 877-927-6648. So what do we want to take a look at next out here? My guess is gold. Goldilocks out here, down $3, trade out at 13.17. What's gold doing? I'll tell you what it's not doing as we speak right now. It's not breaking out in any currency. Yeah, Not dollars, not euros, not pounds, not yen. It's just simply not breaking out. Well, if it's not breaking out, is it breaking down? That's really the question out there. And at this stage of the game, the answer is going to be no, not really. Maybe. Right? No, not really. And then I said maybe. When I say no, not really, I'm looking at the daily time frame chart out here. That's panel number 2 from your right-hand side out there. And what you and I are watching for is what's going to happen at the price level of 13, 15, 40. Now, look, gold has been down there, over the past number of weeks out here. But at this stage, that is our only level of support that you and I can rely upon. There's another level here on a 240-minute chart. That's at the 1311 arena. So 1311.90 is a possibility. But the reason that I was hesitant is this thing breaking down, just like we looked at on that Aurora equity out here. In this case, except it's I take that back. It is a weekly time frame chart as well. In this case, gold in dollars has not been able to close above, get above, stay above 1324.20. It had a chance last week. It had a chance. The actual high was 13.26.30, and the close was 13.20.70. Missed it by that much. Yeah, that's right. Get Smart used to say that. Don Adams all the time. Missed it by that much. That's the problem. It missed it by that much out here. What we need to see, for those of us that are long gold, not long gold as we speak right now, we need to see price close above that resistance. That old support level is now resistance out here. And if it doesn't, we just have to be looking for something else, because it's just not doing a lot. As I say, gold hasn't broken out in euros, hasn't broken out in yen, hasn't broken out in pounds, and certainly has not broken out in dollars. Not as we speak at 1:47 in the afternoon. Not much else to report on there. Hey, if we take a look at the New York Stock Exchange, right now, the advanced decline line is still at a new all-time high. Really interesting. Market breadth, really inside the New York Stock Exchange, has been really strong. Even when price was making lower lows on a closing basis back on March 23rd out here. Bull markets, with the exception of one, bull markets do not end when the advanced decline line is at new all-time highs. The typical meaning of the advanced decline line at new all-time highs, what it means is we're going to see higher highs, but we haven't even gotten to the all-time high inside the New York Stock Exchange. So what it's really telling me is at some point in time, maybe over the course of the next several months out there, New York Stock Exchange has got a chance to get back to its all-time highs. It's got quite a ways to go, but there's really good market breadth. And the type of divergence with regard to, is the New York Stock Exchange, when the advanced decline line is all-time highs, yet the price inside the New York Stock Exchange was at new all-time highs back in several months ago, is that the type of divergence that sets up something to worry about? The answer is not that I've been able to see out there. Now, if we take a look at what's going on as far as the advanced decline oscillator reading, still above zero. 101 is the number out here. It's above zero in the NASDAQ composite. It's above zero inside of the Dow and inside of the S&P 500. You and I, we take a look at the spot volatility index. She's trading out at about 1308 as we speak. Is that the number? No, the number is 1309. The 50-day exponential moving average, 1676 out here. So, price seems to be struggling where it should. The Russell 2000 back at the all-time highs. The NASDAQ composite back where the island formed out here. The island bond. And that was between the trading sessions of March the 9th, really through the island formed here March the 16th. And price has tried to get up and save those passengers, send out a life preserver by getting up to the price point of 74.6903 to cancel that. Ixnay, adios, no more. Island top out here inside the NASDAQ composite. Hasn't done it yet. But of course, if there were going to be sellers lined up anywhere and you took a look at these charts, you would have already had those drawn in, for example, between 74.35 and 74.69. And so it makes sense that price is struggling as we speak right now. It just makes all the sense in the world. On the other hand, the Dow here is above a prior swing point. even though I'm sure it's on light volume as we come into this summertime, summertime. The swing point I'm referring to is April the 17th. The high out there, 24, 858.97. So this could easily be an A to B equals CD to the upside before it would form a Gartley sell pattern out there. Price is struggling, in essence, where it should. So will the sellers be able to pound on the buyers and get things moving to the downside? I don't know just yet. It's not that clear. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 80, S&P's up 3. So Martin writes in, and let's go to Martin's question straight away here because we're in that short segment. Martin says, Steve, just tuned in. Not sure if you covered the SPY. In essence, I really didn't. Any take on a mid-June Bradley model turn date? Thank you, Martin. You know, I haven't really followed the Bradley model out there. In fact, I kind of gave up on that model quite a while ago. Didn't really seem to work for me. And then you had people talking about how it would invert, and that meant that you just could never be wrong with regard to using the Bradley model. So I just simply have S-canned it, so to speak. Doesn't mean you shouldn't use it. I just don't use it out here. But what we can do is go ahead and use other patterns, right? Now, these other patterns are more consistent. So here's what you and I know about the SPY. SPYs right now. The SPY here formed a swing point on April 18th. They did it with 57 million shares out here. And Martin, that swing point was passed a few days ago. May the 10th with 72 million shares. What that does is that confirms an A to B equals CD to the upside. That price point, that price projection, the 1-to-1 level out here is 275.68. You're trading at 272.92. So I know you're looking for mid-June out here, but it looks like the 1-to-1 price projection, which would set up a version, and I did mean a version of the Gartley sell pattern, may just be a couple of days away, such as Wednesday. And then the question becomes, what are you going to do if price gets up to 275.68 and you were looking for the Bradley turn? I say take that Bradley turn, stick it in your desk, close the door, and go ahead and use some of these other patterns. Now, a market, a stock, a currency, only makes a 1-to-1 60% of the time. It's possible that this is one of the 40%ers. And price could get up to the 280 level out here. We'll just have to wait and take a look at each day. But if we were trading the SPY and we were calling the market, and that's what you asked about, we would say there's no top in place inside the SPY, not until you get to at least 275.68. Thanks so much for writing in, folks. Thanks so much for being here. Stay tuned. Your favorite polar bear and mine, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you at about 3:15 for a short segment. Other than that, have a great day, a great Monday. We'll see you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.